SWERF, the European Money and Finance Forum, bringing together policymakers, finance, and academia.
Welcome to this SUERF BAFFI Bocconi e-lecture on the 2024 ECB Annual Report on the international role of the euro. The last year was marked by geopolitical shifts, tensions, and conflicts, which are also having repercussions on global trade, financial markets, and international capital flows. The duration of these effects will, beyond the short term, also be longer lasting. An end to these rifts is not on the horizon. If anything, global fragmentation may deepen further. What do these developments imply for the global financial system? What are the effects on the role of major currencies as global means of exchange, unit of account, and store of value? How to interpret the big economic powers, foreign policy, and economic actions with regard to the implications for the relative weight of the US dollar and the euro? What role for the renminbi and other currencies of the global south relative to the US dollar and the euro? What might be alternative cross-border payment rails, including digital currencies, for the international monetary system? What concrete measures might the EU and the euro area consider to help develop the euro's role in the international monetary system? Yesterday, the ECB released its 2024 annual report on the international role of the euro. The report contains a wealth of data and analysis on various aspects of the international monetary system. In addition, it offers two very interesting boxes on sovereign wealth funds and on CBDC internationalization. We are happy and privileged to have with us today Isabel van Steenkiste, Director General, International and European Relations at the ECB and also member of SWERF's Council of Management. Arnaud Meil, Advisor in the ECB's International Policy Analysis Division, and Maurizio Habib, Team Lead Economist at the ECB, to present key findings from the report. This euro area view is then complemented with a global and Asian Chinese perspective offered by Alicia García Herrero, Chief Economist Asia Pacific at Natixis and Senior Fellow at Bruegel. Without further ado, may I hand over to Isabel, Arnaud, and Maurizio.
Thank you very much, Ernest. And it's great to be here for, I would say, no annual rendezvous with SWERF to present his reports. As you mentioned, this report, as per usual practice, discusses the developments on the international role of the euro over the past year. And in this case, that's 2023. And it was quite an interesting year with geopolitical tensions remaining high. And of course, also central banks continue to raise interest rates in response to inflationary pressures. So let's have a look what it means for the role of the euro. Maybe I give you already the punchline for those who have to log off early. In broad terms, we see little substantial changes, no substantial changes really in the use of the international currencies. But we do see signs that we need to be vigilant to cracks that are starting to appear in the facade. And that means that's always the case, but still we shouldn't take the international currency status of the euro for granted. And the onus basically to create an environment in which the euro as a currency can flourish is really on European policymakers. So on the next slide, just very briefly showing the outline, what I'm going to discuss is the key developments in the international role of the euro. And then I'll pass the floor on to Maurizio, who's going to delve a bit deeper also into the boxes that we had in the report and give some concluding remarks and also delve a bit into these policy messages that I gave just a very big picture saying the onus is on European policymakers, but where can the focus there be? So starting with the key developments, and here we have really an evergreen chart in the report, which is our composites indicator on the international role of the euro. So it is basically an average of a number of sub-indicators that we consider relevant to measure the international role of the euro. You can find the details in the footnotes for those who are interested, or I can refer you to the report that was published yesterday. If you focus on the very latest developments and you look at the gray circled area, you can see that at current exchange rates, the international role of the euro from this composite indicator remained broadly stable. There was a slight decline when we look from the constant exchange rate perspective. I mean, we juxtapose this here, these developments to the share of the euro area in global GDP, and we plot this here since the inception of the euro in 1999, and you can see that the role of the euro has remained relatively stable or held up quite well if you look at the decline that we've seen of the euro area in global GDP, right? And it also shows that the euro area for the moment is punching above its weight in global GDP in terms of its international status. If you would show other currencies like the Chinese RMB, you would see exactly the opposite, right? So you would see a rising share in global GDP, and it would be above the international status of the currency. Now, in the next slide, decompose a little bit this snapshot for 2023 into these various subcomponents that make up this composite indicator. Also comparing to other international currencies, and we can see that basically the global landscape is unchanged. So the euro remains the second most important currency. The dollar remains the unchallenged most important global currency, but euro still remains also quite a bit ahead of the third and fourth most important currency globally, which is the Chinese RMB and the Japanese yen. And if you look across indicators, you know, the share of the euro hovers around 20%, in some cases somewhat above, somewhat below, but you know, that's more or less you know, a stable kind of picture that we have there. Now, digging a little bit deeper, in particular into the first indicator, I mean, the one that we maybe see generally as the most relevant one when we're thinking about the international currency status, or at least the most traditional one that one refers to, which is the share in the global foreign exchange reserves. And here we have on the left-hand side the share development at constant exchange rates, and where you can see there was a decline last year, a slight decline, and this is shown in the blue line, right, to around 20%, slightly below 20%. The dollar has a slight increase. I mean, there's a bit of a wiggle there in 2023 if you look at the gray shaded area, but the yellow line, on average, there was an increase. But of course, what's the most striking, I think, in this picture is, of course, the rise of the importance of other currencies, which has been going on since 2009 and continued last year. And as a basket, basically, as a group of currencies, they've overtaken the euro in terms of their share in the global foreign exchange reserves overall. Now, if we correct the developments in the euro holdings of foreign reserve managers for valuation effects, so you have both the exchange rate valuation effect and bond price valuation effect. If you look at the actual actions that foreign reserve managers took, then we see that there was actually a net sale of euros last year, and that's what you can see in the chart on the right in the green block, basically. Just to note that normally what we traditionally see with reserve asset managers is that they try to offset exchange rate movements. So, for instance, last year the euro appreciated. That means if foreign asset managers would not have acted, basically, this would have implicitly increased the share of the euro in their basket. But they tend to offset, and then you see that across currencies. But of course, in the euro area, for the euro, you see that they have more than offset that, basically, and it led to an active net sale of around 100 billion last year. Now, one may be a bit surprised to see that if one realizes that last year the ECB has continued to increase interest rates. They started already in the course of 2022, but that continued. And if you see that long-term interest rates over the review period increased by around 100 basis points and short-term rates by more than 300 basis points. But of course, you know, and the rest of the world was, you know, there were not unchanged policies. There were also increases in interest rates. And that meant that the interest rate differential basically remained, you know, and it was not a factor that neither, you know, reduced or increased basically the share of the euro in global FX reserves. So you see that here on the left-hand side, the interest rates in euro area still remain below some of the other major currency issuers, of course, with the notable exception of Japan. Now, if we dig a bit deeper into the data and to look at, you know, who are these net sellers of ex-Swiss reserves, then we see that the Swiss National Bank played an important role there. And that's not because they started disliking the euro, but they were just defending their currency. So they engaged in FX interventions, right? And that led basically to a sale of euros, which we see visibly in the data. This role of the Swiss National Bank, actually, if you look longer over time, we see it also already over the past, you know, let's say almost decade now. And that's what we try to illustrate in the chart on the right. So bear with me a little bit when I explain you what this chart shows. So this is basically based on information and a methodology by Linda Goldberg and her co-author that was recently published. And they wanted to unpack basically what drives changes in the share of currencies in global FX reserves. And one factor that can lead to a change in share is just that global reserve managers increase their reserves overall. And if they do so in a way that's biased towards one currency because they tend to have a preference for one currency more than the other, then of course for that currency it would show up as an increase in the share of that currency in global FX reserves, although basically there was no change in conscious change in the composition of portfolios. So just to give an example, if the Swiss National Bank, for instance, has proportionally more euros in its FX reserve basket, and if they acquire more reserves, then you would see that implicitly as an increase in the share of the euro, because it's proportionally more than the average, right? And in this analysis, and in the chart on the right, we call this the wealth effect, basically. So, these changes are not due to active changes in the composition of the portfolio, but just that the overall portfolios increased, and proportionately those countries that were holding more euros were doing so. Another factor, of course, that could matter is that foreign reserve managers actively change within their portfolio the share of euro versus other currencies, and that's what is called the preference effect, and that's shown on the right in the blue bar. And then you have, of course, a red block, and that's undisclosed, and that's basically because there's a bunch of central banks that don't disclose their currency composition, so we cannot really unpack whether it's the wealth or preference effect. Now on the chart on the right, what you see is that this wealth effect for the euro was quite important in driving an increase in the share. And if you look behind which central banks are behind that, then I'm coming back to the Swiss National Bank story. It was the Swiss Central Bank, but also the Central Bank of Russia. And these both central banks had a higher preference, let's say, implicitly in euro in their basket overall over time generally, and they increased their reserves over that period, and that basically led to an increase in the share of the euro over that period. Now, there are also other factors that could explain why the euro share didn't increase last year. And one is basically when we look at surveys by FX reserve managers, that they note the lack of supply of high-rated euro area sovereign debt. And this chart basically corroborates what they're saying in their survey. And this chart just shows the evolution over time of the share of highly rated euro area government debt and outstanding highly rated global government debt. And you can see it has been declining over the years, basically. Then finally, another factor that, of course, is on the minds of many is what's the role of geopolitical factors, right? And so here on the chart on the left, you just had a look at the official BRICS Plus investors and looked at what's happened to their holdings. It excludes Russia because Russia currently is a captured investor, right? So, I thought it would be better to just look at those who are actively buying and selling, in particular also in euro-denominated government debt. And here you can see basically that they were not behind this decline, and they actually increased by 60 billion their holdings. So they basically were leaning against this overall decline that we see. But one of these cracks in the facades that we may say that are, of course, appearing, and why we would continue to monitor this, is when we look at surveys, and this is here on the right-hand side shown an UNFIF survey, but there's also surveys by HSBC, and they all show kind of the same message, that official reserve managers are considering geopolitics as an important factor going forward, right? And that is a change compared to what we saw before Russia's invasion into Ukraine. So here you see in 2021, 20% of official reserve managers were seeing this as a factor for the next 5 to 10 years. This has now gone up to above 80%, so that's quite a substantial amount. Now, these geopolitical considerations we see also reflected in other indicators. So in the next slide, we have also the accumulation of gold by central banks. And that's basically also a theme that we had already last year in the report, and we see this continuing this year. So gold is being accumulated at a record pace, again in 2023. So if you would plot this chart all the way back to 1950, you would see that this is really historically high amounts. And this is driven also by geopolitical risk considerations. At least if you look at the composition of those who are purchasing gold, and there is a link with countries that are geopolitically close to Russia and China. Now, looking at the other sub-indicators, let's say, that would track the international role of currencies, and we look at the international issuance of foreign currency-denominated bonds, then we can see for the euro that in volume terms, it has remained unchanged. You can see that on the chart on the left. The blue bars basically are more or less level, but the share has basically declined. And if you look on the chart on the left, you see the euro, the US dollar, the yellow bars have increased, right? And so relatively, the euro has declined in share. Now, I'm looking at where this issuance took place, in particular for US dollar denominated bonds internationally. It was in the euro area, but also in other advanced economies, and it was mainly regional development banks. If you look at emerging markets, their dollar issuance was more or less flat overall. There was no major change. It declined in China, but it was compensated by an increase in Saudi Arabia. Finally, on the next slide, just looking at all the other indicators evolution, what we see is a mixed bag. Now, if you compare to the historical, let's say, fluctuations that we tend to see in these indicators, most of them are within a normal range. So it's not something where we would not really pick up where we see major developments, except outstanding international deposits, where the move was a little bit larger than what would be the historical standard deviation kind of movement. But overall, these developments more or less underscore why we come to the conclusion in the report that the international role of the euro was broadly unchanged last year. And here I pass the floor to Maurizio, who will cover the second part of the presentation.
Many thanks, Isabel, many thanks. And let me now delve into some more innovative part of the report compared to the previous years. So, and in particular, I'm summarizing again the main messages of Isabel. Although the data so far, they show no evidence of substantial changes in the use of international currencies, we do see cracks appearing in the international monetary system. And where are these cracks? They are in the global payment space. That here we see risk of fragmentation that continue to emerge. There have been a number of initiatives. We don't need to go through the whole list, but here they are just listed. You can just glance at them. But what is interesting here is the countries that are taking these initiatives. And then the list is unsurprising. So there are the BRICS plus economy, Russia, Iran, Brazil, India, China. So there are all these initiatives. They tend to develop alternatives to bypass Western payment infrastructures, something like the SWIFT, and also to bypass the US dollar and the euro as in trade invoicing. And what we see in the next slides is that these initiatives, they start to be working, at least for those countries concerned that are taking those steps. So we have a chart on the left-hand side, which is for trade of Russia, and on the right-hand side about China. On the left-hand side, you see trade between Russia and China, and you see that the invoicing of trade between Russia and China is growing in non-sanctioned currencies. What are these non-sanctioned currencies? Basically, is the renminbi. So you see the share of these non-sanctioned currencies are now about 30 to 40% of Russia's trade. So that is the first trend. Chart on the right-hand side that we borrowed from Alicia, and then we have also acknowledged in the report. It shows instead the trade of the invoicing of trade in China, or external trade. And again, you see that since the invasion, since 2022, China has managed to increase the role of the renminbi as an international payment currency. It pays now more than 1/3 of its international trade in renminbi. Crucially, a lot of this invoicing and trade that is involved in renminbi is with Hong Kong. There is a strong regional role, but China pays also in renminbi several other countries, including those from which it is a close ally. There are also other market segments where we see a stronger role of the renminbi. And the chart on the left-hand side shows a peculiar market segment, which is trade finance, so letters of credit, for instance. And then we see that in this market segment, on the left-hand side, the share, I'm sorry, I don't know what happened here. Can you see now the slide? Yes. You can see on the left-hand side that the share of the renminbi, can you see the slide? Yes. The share of the renminbi increase over time. Then you see that is on the left-hand side scale, like the euro, and is now higher than the euro, and while almost close to the euro, while the dollar is the dominant currency, because on the right-hand side, 80% of this trade. And what is more remarkable is what you see on the right-hand side, which is how quickly China cross-border interbank payment system, which is an alternative to SWIFT, is developing. You see that activity in this payment system has increased by a factor of 5 since the pandemic, the yellow line, And then there are now over 1,000 participants, not shown in the chart, that have joined this new interbank payment system, which is based on the renminbi. So that is finished, let's say, the overview of the cracks appearing, and then I'll turn to a couple of boxes that have been also announced by Ernest. That's where we look. First, we have a box on sovereign wealth funds. These are state-owned investment funds or entities that are commonly established to manage the foreign assets of national states, to finance budget deficit, balance of payments needs, or saving funds for future generations. Now, these funds, these sovereign wealth funds, are growing and are becoming really important. They now have assets of around $12 trillion. And remind, this is the same amount of global foreign exchange reserve. So it is really an important asset. We have a data set where we can monitor a subset of transactions. So not assets, but transactions, mainly purchases of assets, mainly equity or hybrid instruments like convertible bonds by a large number of countries, in a large number of countries. And then we total almost 2.5 trillion of transactions since 2000. We have some preliminary findings. And then basically that the purchases of those assets by sovereign wealth funds are largely located in major advanced economies. So 70% of investment of sovereign wealth funds is in advanced economies. However, when you look at the origin of the investment, you see that a significant share of the sovereign wealth fund of this transaction comes from funds that are located in emerging market economies. So for instance, China hosts the largest sovereign wealth fund, but they are also located in resource-rich economies or emerging markets with large current account surpluses. For instance, United Arab Emirates, Norway, Singapore, and Kuwait. So there are also some advanced economies. Finally, we look at the currency, and that is quite interesting because here we are talking mainly about equity investment. So the currency dimension is somewhat less important, but still we see that the US dollar is dominant, much larger than the share as an investment destination, almost 70%. Euro is the second most important, but rather distant, almost 9% of investment. So eventually the dollar is often used as a vehicle currency for purchases of assets that are not involving US-based firms. And what are these kind of trades? That, for instance, there are a number of European or advanced economies, major firms. They have dual listing. They're listing in their own stock markets, but they're also listing in the United States and they issue shares in dollars in order to target US investors. And there are also another typical instruments, American depository receipts. So that is why the dollar is still dominant, because they manage to attract this kind of issues. And then we see also that in the case of the euro, occasionally it has been used to finance acquisition of firms outside the euro area. Now the second box instead turns to a completely different topic. It is central bank digital currency, and in particular the international aspect of these central bank digital currencies. So all the projects, so we don't have yet many CBDC, but there are plenty of pilot projects, and we see that they have mainly a domestic focus. However, we see also that almost 30 to 20% of these central banks, depending whether they're in advanced economies or in emerging markets, they are also looking at their use across borders. And then we look at what happens in the major currency area and to see what is their attitude towards CBDC and in particular the international aspects. Starting with China. China again officially stresses that this is domestically. That is something that is done in order to help for domestic needs. However, they tend to have a sort of open attitude, the international use of the yuan. So we see they have a tendency to broaden access to foreign users through selected initiatives and pilot programs. For instance, there are a number of banks in the neighboring regions, for instance, in Singapore, private banks that they may open portfolio to the private sector where they can buy the yuan. And also some restriction, for instance, to the retail use of the yuan have been lifted. So you can buy, for instance, with credit card. So there is sort of positive attitude. It's not an objective of the Chinese authorities, but there is a positive attitude, more steps. In the United Kingdom, there has been a proposal by the Bank of England and the Treasury. Then what is crucial, the point to take home, is that in this proposal, non-UK residents, they will be put at the same position like UK residents, and they would be able, if there will be a digital pound, to hold and use the digital pound at a similar level like UK residents. Now, the situation when we cross the Atlantic is completely different. There, in the case of the US, there are really growing domestic concerns towards CBDC in general. So the issuance of CBDC, and are largely related to user privacy, consumer protection, and the role of the Fed in the payment system. Finally, what is the situation in the euro area? The primary objective of the digital euro project is to provide European citizens with a universal means of payment that can be used everywhere in the euro area and for all use cases. So again, the focus is domestic. At the same time, also the legislation acknowledges that there is another set of objectives. There could be another set of objectives of the digital euro, and it's the one to take into account the view of support euro area open strategic autonomy. This is why, also in the legislation that has been tabled, we see that there are risks that third country CBDC and stablecoins may reduce the role of the euro in the future if they may be more widespread in the market. So that is why also a set objective is important, and this internationalization of the CBDC will be taken into account when developing the euro. So finally, it's time to look at what can we do basically to strengthen the global position of the euro at the core of an integrated global monetary system. There, basically, we should intensify policy efforts with a two-leg strategy. And the first slide, you see first what we can do internally. And then, of course, the first one is to develop, the priority is to deepen and complete the economic and monetary union, in particular with further economic and financial integration and a genuine European capital markets union. And that is really crucial. This should be done in the context of sound economic policy, the second part in the center. Finally, it is important to build stable, technically resilient, deeper and more liquid markets for international accepted euro debt securities. That is really essential. We need that the appeal of these markets depends on the resilience on the underlying market infrastructure, and then the possibility to have a broader pool of euro safe assets, safe common instruments in order to act as a European risk-free benchmark, which will be crucial to deepen euro-denominated capital markets. So these are the three legs, at least internally. Then at the same time, there is something innovative in the report, and then is the part on the external policy side. And then we try to face more that the cracks that we have seen, and that it refers to the global payment space. So what we can do here, what Europe needs to do, is to further develop the infrastructure for making cross-border payments in euro with key partners. And what can we do this? We can do this interlinking, for instance, the euro area target instant payment settlement system with the fast payment systems that other markets, the other economies, the other jurisdictions are developing. This could be done bilateral, through bilateral links, but also through multilateral platforms. And all these steps, eventually, they will pave the way for potential cross-border payments in future central bank digital currencies. To conclude, summing up, so far, the data that we see, they show no evidence of substantial changes in the use of international currencies. However, we need to remain vigilant because we see that there are cracks that are start appearing in the international monetary system, in the facade of the international monetary system. And this is why the message of our president, in particular addressing the recipients are the EU policymakers, is that the international currency status of the euro should not be taken for granted. And this policy that we have listed, they should be pushed forward. In particular, deepen European economic and financial integration, and together with enhancements in cross-border payment system between the euro and other currencies. And many thanks for your attention. And then I close with advertisement about the report. Here is the website. We have a website where you can find, this is the link, and you can find on our website. These are the various steps to reach it, or you just Google it, and you'll find where you'll find all the previous reports, all the previous boxes, and also our board member, Cipollone, published an article on the Financial Times, and then is also linked to his article on the Financial Times, where he's promoting the role of the euro. Many thanks for your attention.
Thank you very much, Isabel and Maurizio, for this excellent presentation and overview of key findings from your important report. I now hand over to Alicia for your comments and for additional points.
Thank you very much. Thank you for sharing your report. I think it's very interesting to see that, one thing we forget, I very much like your comment about the euro punching above our economic weight. We kind of sometimes feel, well, it's stagnant, but our economic weight is not stagnant, it's actually decreasing. So in that regard, I don't think we should be, we should probably see what the euro has managed to keep as something positive. And that's what I wanted to say. However, and this brings me to the graph you presented on the share, I mean, how the dollar is coming down and those other currencies. I mean, of course, it's a graph with a double, I mean, you have still, I mean, it looks very impressive, but of course, I'm going to show you a graph with both sides with the same percentage. So it's going to be very small, but of course, as you rightly pointed out, growing very fast, the role of other currencies. And then the question here for me is, how much of that is the RMB? So this is just a few slides from a report we'll publish next week, which we do twice a year on kind of going through all of the data of RMB internationalization. And I've just chosen a few for the interest of time. The first one is really a summary of all of the international types of international use of a currency in a weighted way, which we calculate payments, investment, public financing, private financing. Well, I could give a little bit of details, but I think the key here in this graph is that it's mostly about payments, the increase in the international use of the RMB. A lot of this is sanction related. I don't have the graphs in this one, but we already went through that. I think with Maurizio, there is a lot of sanction related payments. Russia is part of it, but it's not only. So you could have, India invoicing in RMB to their dismay, I may say, but still a useful tool through China's international payment system, CIPS. So you see a lot of that, but there's also some increase in private financing. So this is loans in RMB. I'll show you in a minute. So this is more or less what's happening, but I want to focus your attention to a development that in a way disappeared and reappeared, and that is the role of Hong Kong. So if you remember in the early stages of RMB internationalization, it was all about this offshore market, the idea being that because China didn't have a fully convertible capital account, it needed a type of different market. Many people compare that with the euro dollar. It's not a very good comparison, but at least it shows a little bit the idea of this currency that is convertible elsewhere, Hong Kong, and that is used internationally while protecting the mainland. And then with the devaluation of the RMB in 2015, Hong Kong lost the bulk of the offshore deposits, CNH deposits. Well, Hong Kong is back. And I think this is quite interesting. Probably the main reason is that it is now much more daring, if I may say, to enter the mainland, which, RMB depreciation, but also increasingly tough capital controls to exit. So, it's kind of Hong Kong is back, and I wanted to highlight that thing. This is the graph that you showed, but of course I have the same scale on both sides. That's why I said it's going to look very different. But yes, the euro, the numbers are slightly different for some reason, but I mean, the number is similar. It's between 1921, something like that. You explained the role of the Swiss franc and what happened. So, I'm not going to get into that. But what you see there is that the RMB is indeed growing, but from a very low base. And the role of Hong Kong, as I mentioned, from basically 2024. A lot of this is also sanction related, let me tell you, because a lot of the trade finance happens in Hong Kong. So it is also payments, basically trade related payments. Now, the fact that the RMB is keeping its strength as an international currency, and of course with from a very low base, but still increasing, is just very surprising if you think about the RMB depreciation forces. So this, beyond the fact that, of course, the currency is quite weak, especially against the dollar, but I want to focus on the right-hand side, China capital flow and trade balance. So the net forex settlements are really, extremely negative by now, notwithstanding a large trade surplus. So you can imagine how much money is leaving through different channels. And the fact that you can still keep an international currency, or at least the trend, of the RMB internationalization is quite surprising for a currency that is weakening, or that is even, I would say, subject to further weakening based on this capital flow data that I showed you. Well, and then why is this the case? Because a lot of those transactions are captive. I think I would use the same word that you use, captive market, captive transactions, kind of, I wouldn't say artificial use of the RMB, but not market use fully of the RMB. I think, and I would argue that a lot of what you see in Hong Kong is about that. And the other use is quite simple. If you think about it, is interest rate differential. Yeah, I mean, borrowing in RMB and CNH in Hong Kong is so much cheaper than borrowing in dollar. So there's a lot of that happening also in Hong Kong. I have the same graph, Mauricio, that you showed on China's current account settlements, but this is already end of 2023. So interestingly, the share of services is bigger. Of course, service part of the current account is smaller of the trade balance, but the share of RMB use, what this could be indicating is that Chinese tourists are actually using RMB for their payments. This could be digital currencies with the currencies where they have the bridge, could be many things. But I think I just wanted to note that it is growing faster than goods, interestingly. And then the part on financing that I was saying, that for me, it's about captive payments, sanction related, or, countries induced to use the regional trade centers for RMB, like Brazil, but a lot is about funding. And this is overseas RMB loans by Chinese financial institutions. Unbelievable. It's going to 62% of outstanding RMB loans in Hong Kong. This is Hong Kong. So you can see where the action is. Which are these countries borrowing in RMB? Frontier markets, emerging markets, mostly. But maybe they that's what they can get at a lower rate than yield or borrowing cost than if they were borrowing in dollar. What is not happening is that people are investing in RMB. They're borrowing in RMB, but they're not investing in RMB. Certainly not official reserves, stagnating even further. And on the private side, I think something strange is happening, because think about the interest rate differential is only at least stable and very high against China. And people are investing in bonds in China. I mean, this is strange to me. So we're looking at this because there has to be a reason for this happening, that it might not be very market driven. But on equities, it's flat. I mean, worse than flat. Loans and deposits flat. So very little investment in RMB, lots of borrowing in RMB. and captive trade. That's basically the conclusion of this presentation. So yes, it's increasing, but it's in a very non-market way, if I may say. Maybe the institutional framework is there for this to happen, but is this sustainable, especially if you consider the very weak currency and potentially even weaker? So this borrowing but not investment, and I mean this dichotomy, the question is, can it last forever? I mean, this is not the way an international currency becomes hugely international. Maybe you can do it for a certain benchmark, I mean, certain level, but you cannot go beyond. So that's really the key question mark for me. Will the RMB end up like the yen in a way? Even maybe less. I mean, it's already more, but I'm saying in terms of plateauing because of what I just said, because it's not so market driven as it may look at first instance. And that's all from my side.
Thank you very much, Alicia, for these very, very interesting insights. First, want to give the ECB the opportunity for some first reactions. Isabel, Arnaud, Maurizio, who wants to react?
I think now we'll have the coordination problem between the three of us, but maybe I start and then my colleagues complement basically. But I think broadly I agree with the presentation of Alicia, and we have seen this increase in the RMB, right, in some segments, right, and that's also what we note in the report. But indeed, it seems to be, of course, sanction driven. The question is, when there are sanctions would not stay in place, whether this is a lasting development, right? And of course, there's a lot of factors that still prevented the RMB from becoming an international currency, right? And just like we say for the euro, the onus is on European policymakers. On the RMB side, a lot of this would also be in the hands of Chinese policymakers, whether this can be promoted or not. And I mean, the factors that drive an international currency are the same. Let's say the rules of the game are similar across jurisdictions. So in that sense, the question is whether Chinese authorities really want that. Of course, you see more of a move towards having an international currency, right, for the RMB in some areas, right, like trade invoicing, payment trails, right, where they provide this opportunity. So the question is also what policies the Chinese authorities will pursue going forward, and to what extent they want to really take certain measures that currently they may not be willing to take, that would help promote an international currency. But fully agreed. I mean, just on the rise of other currencies. So when we looked at FX reserves, of course, there the RMB is not playing such a big role. But other currencies where we see the rise, of course, we have also Canadian dollar there, the Aussie, Kiwi. We had basically a whole bunch of currencies there bundled together. When we come above a share that is above the euro for the moment, but I mean that increase has now been going on since 2009 in FX reserves. This diversification, and that's a trend that we really see continuing, going forward. And by now, as a sum, they've become bigger than euro. Of course, if you look at each of them individually, they're still very, very small, right? So it's all about the perspective you take. But I don't know if Arnaud or Maurizio want to complement.
I think that that we have in the report this regional role, in particular of the renminbi and with Hong Kong. And then what is crucial here is to assess how the synergies between the different uses of an international currency may play. And we had a box last year in the report, so I will pass it to Arnaud because it was one of the authors of this box that elaborates exactly on the point of whether if you push more on trade, you are able to trigger more uses in different uses of the currency.
No, I don't have much to add. It's there is a lot of commonalities in what you showed and what we think. I mean, to me the big question is what's going to be the steady state status of the RMB given policy conditions, initial conditions, and potential distortions that exist in the Chinese economy. Future will tell. And that's anybody's guess.
Yeah, perhaps just to remind, because I don't know whether we mentioned, and also I'm not sure Alicia mentioned that the share of the Chinese renminbi basically in global foreign exchange reserves as an investment currency is stuck. You mentioned exactly this point, but really to give the number, is somewhat stuck at 2.5% of global foreign exchange reserves. And this contrasts with the attitude of official managers that in the past, they always had, if you look at surveys, they showed the intention to increase the share of the renminbi over the medium term in their portfolio. However, probably due to the geopolitical tensions, somewhat this increase in the share of the renminbi was taking place slowly over time, also with the entry of government-backed securities in major benchmark indices that are stopped. So that, but the intention when you look at surveys is of a global foreign official managers is to increase the share of the renminbi. But in actual, at least in the short term, we have seen that the share of the renminbi, the increase in the share of the renminbi has stopped in global foreign exchange reserve.
Thank you, Maurizio. Alicia, do you want to react to these points?
I think it's quite clear because the message is very similar, and perhaps the wild card is what's the status quo, what's the end game. And I think one thing to realize, this is actually quite important because Xi Jinping himself has in one of his recent speeches and before actually the issuance of this 1 trillion ultra long and pretty low sovereign bond, pretty low yield, I mean to say, he came with this idea that China had to use its sovereign, its credibility on the sovereign by the sovereign compared to the local governments to really support the economy. So, this thing really means, it could mean two things. It could mean taking over all of the local government debt, maybe QE eventually. I mean, create a benchmark and then have the central bank really buy all of this new central paper with lower rates, giving more fiscal space to China. But also, and this is our topic here, maybe the fact that because China's debt is already 100% of GDP public debt, maybe they realize that it might be Japan, it might be, deflationary pressures, debt ratio doubles, and they need the world. Conditions change and China becomes an external debtor. And for that matter, maybe they do need a more liquid, as you know, there's so few issuances, overseas issuances, let alone in Europe, by the way, by the Chinese sovereign. So maybe this idea is starting to appear. In other words, the idea of China needing an international currency for the same reasons as the US. Of course, this is just very embryonic, but I'm saying it seems it could be an insurance for China's ballooning public debt. And I wanted to say that because I feel something is changing about the need for an international currency. The need is starting to appear in the speeches. Before, it was just nice to have, but there was no kind of clear underlying behind this. This is starting to change. So this, to me, means that if they really need it, they will have it. How? Maybe it won't be market driven, but then the share might increase in different ways. So that was my comment. Yeah.
Thank you very much. Meanwhile, we have a couple of very interesting questions in the chat. You can read them yourself, but I'll try to just summarize them. First question relating to the role of gold. So China is buying gold, as we all know. And to what extent might there be trade-offs with US dollar holdings? So this is maybe the first. And are the statistics correct? Is it all reported that has been bought? So the second question is then on a project called mBridge. As mBridge is expanding, for instance, with Saudi Arabia, it has 25 plus observers, mostly from the global south. What do you think about its future? Can it challenge the US dollar and the euro in cross-border payment settlements? Later, BRICS bridge can emerge with similar challenges as has been mentioned. So this is the second point, so payments infrastructure. Then the third question relates to the external factors that the ECB reported to promote the euro's international role. For now, these proposals focus mainly on payment infrastructure. Should the ECB be more ambitious, for example, by doing more to promote commodity pricing or investments to be in euros rather than dollars? So trade invoicing, commodity invoicing. And the fourth question is, what kind of cracks, for instance, macro events, can you maybe envision on the current hierarchy of reserve currencies, which might challenge the status quo? And meanwhile, fifth question has come in. What is your take on the recent news that Saudi Arabia exits the petrodollar system so it accepts other local currencies for its oil exports? Can it accelerate the trend of de-dollarization as other oil commodity exporting countries can follow suit? Thank you. I mean, these are all very, very big questions, very interesting questions. So I don't know, maybe Alicia, you want to start, and then I hand over to back to the ECB.
I'm not sure I can take all of these questions. They're very difficult. And I believe I've gone through some of them with Daniel. But there are others that have with Daniel Nagy. I think I hear all of this. Just let me give you one example. I've been hearing that Saudi is, invoices oil in RMB, but when you look at the data, at least I can't find it. Maybe, somebody has that. But, there is a lot of hype on, I think those really invoicing are those who have no choice. That's my, my sense. That doesn't mean it won't happen. And I think, this is very important for the US, no doubt about it. If I had that debt, looming debt, I would be very cautious about what Saudi is doing or not doing with its with the petrodollar system. But as of now, people prefer to hold dollars and borrow in RMB. That's the reality so far. Whether this will change is, again, but so if you have to hold RMB because you cannot sell your oil anywhere else, you will do it. But frankly speaking, as of now, as we speak, my reading of Saudi is very different, is that they know they cannot compete with Russia because Russia is just basically slashing prices on you saw the part of Siberia too, what's happening with the negotiations with China. So when you have a competitor that is ready to do anything, I don't think what you would be doing is to invoice in RMB because it's not in your interest. What you would be doing is to look at India. And I think that's what Saudi is doing. So the fact that China has kind of a captive market, using Isabel's expression, really doesn't necessarily mean that the RMB will be used more. It means that it will be used more by the captive market or markets, yeah, which it so happens, and I agree with that, are many more. We have Iran, we have North Korea, but these are not the largest economies in the world, let's face it. So, and as far as reduces the interest of others following this because of the reasons I mentioned, because they compete on the wrong path, then what's the point? So it's a double-edged sword for the RMB to be pushed by the outliers, or the captive markets, because the others may say, I don't want to be a captive market, so I'm not getting there. And that's, I know I'm not answering all of the questions, but I was trying to make a point on something that to me is essential, is that by not developing that market-driven RMB internationalization, in a way, the ceiling is lower, because many don't want to be there. And I think that's something that might keep the dollar there for longer than economic conditions may have warranted.
Very interesting and valid points, in my view. Isabel, Maurizio, Arnaud, what's your go at these challenging questions in the chat?
Let me have a go maybe as well and complement already what Alicia has been saying, and leave it then again to my colleagues to also fill in any gaps that I have left in my answers. Just taking them maybe one by one, and the question on China, what they're buying, you know, whether they're holding more gold than officially reported. I mean, we don't have any information beyond what is officially reported, so it's very difficult to speculate beyond that. It's also one of the countries and reserve asset holders that we don't have the currency composition. So when I was showing these blocks of, you know, unknown, they're basically part of that. So one can always speculate, but I think for us it's very difficult to make any firm statements on that. The question related to Enbridge. So I mean, Enbridge, for those who are listening in that have not heard of this, this is one of the projects that are pursued by the BIS Innovation Hub, right? And they're trying to interlink here basically CBDCs across border. This is one of these many technical projects that the BIS Innovation Hub is engaging into, basically. And, you know, of course, there's a lot of things happening on the payment system front in terms of technological innovation. So there's a lot of experimenting going on and trying to find where things will evolve. I think now also, for instance, the BIS recently announced this project Agora, which is also part of the Innovation Hub. So what is the future of that? I mean, I think at this point, you know, it's always easy to say that, but it's a bit too early to say, right? Countries engage in that. Is it something, you know, as it's picked up, that the Global South is been more vested into the Enbridge than other BIS members, let's say? Is it something where it could challenge the euro and US dollar? I go back a little bit to the basic discussion there that we have. You know, the onus is really on policymakers generally, you know, to support international role of the currency, and that's many aspects, right? So of course, offering very well functioning payment rails is one factor. It's important. This is also why when Maurizio was showing the slides, this is one of the policy measures that we can take, and that you of course continue need to take. We need to offer good and cheap solutions, right? So this is important, but there's of course other factors, and as also mentioned on the Chinese side, I mean, you know, opening the capital account, as long as the capital account, for instance, is not open, I mean, there will be a limit to how much your currency can become an international currency. So there's many other factors that need to fall in place, and I mean, at least for the report, we focus on what euro area policymakers should focus on, which is important. We can look around a lot what others are doing, but I think the onus is mainly for the international role of the euro on ourselves. Now, in terms of these measures of promoting the international role of the euro and whether the ECB should be more ambitious, yeah, we can be ambitious, but within our mandate, of course, and there are limits, of course, to what we as an institution can do. It's also, and you know, that was also what the slides show, a lot of from the European policymaker side, right? And very often in our messages, for instance, we say a capital markets union is an important element, right? These factors, offering deep and liquid capital markets, is a factor that makes your currency more attractive. This is why the dollar is the dominant currency. And of course, measures that we take. And this can also explain why maybe some exporters prefer to invoice in dollars, right? So if we make these factors more attractive, then you know, this will naturally follow from that. Of course, from the ECB side, we focus on the payment rails because this is something where, of course, from the central bank, at least we can offer the technological solutions that make these things, you know, easier to happen. In terms of the cracks that we can envisage that to the current hierarchy of the reserve currencies, well, I mean, and I think Arnaud can complement me there because he has done so much research on that, on what suddenly causes a shift in the international status of currencies. You know, very often you have an international currency and maybe suddenly you don't have it anymore, right? So there's non-linearities, tipping points, and this is why we look at small cracks, because at least you don't want to avoid that suddenly you reach such a tipping point where your status quickly dwindles, and this is of course where we again push all these messages on the European policy side to stay on their toes basically for that, right? The question on the news that Saudi Arabia is exiting the petrodollar system, whether this is accelerating a trend of de-dollarization. So what we do see in the media, and you see that especially from the Global South quite prominently, this wish to reduce dependence on the dollar, right? So and intentions to change their invoicing systems. The question is, of course, to what extent that will be sufficient to generate on their side international currencies. It's very difficult, as I mentioned. There's a lot of research on what can lead to a switch in an international currency status. We don't have many observations, which also makes it more difficult to draw firm conclusions. And I think they're also on the US side, it's the same. If you have the policy measures in place that ensure you have deep liquid capital markets, you have sound domestic fundamentals, all these factors are very important to ensure that you maintain the status of your international currency, and the same is for the euro. But I think Arnaud, on this latter point, he's really the person who has done the research on that, can give some insights from his own research in that regard. Thanks.
I'll be short. So it's exactly as you say. So there are two. When you need a big shock, there are two types of big shocks. One could be wars, and the other could be massive policy mistakes. Now, at the current juncture, do we have risks of wars or massive policy mistakes? I leave you that to your judgment. But this could be historically the two events that could lead to changes in the international monetary order.
Thank you very much. Maurizio, do you want to have a final word?
Yes, absolutely. I mean, to add just a couple of points, to answer at least a couple of questions that from the audience, taking some parts from the report, some information that we have the report. The common line of this reply is coordination. The issue of ability of try to coordinate among different economies or different countries. And that basically it is a big challenge, because of course many countries, they may want to get rid of the dollar or perhaps the euro, but it cannot be taken for granted that you be able to coordinate. And so Enbridge, it is one of these projects where they try to overcome through the BIS, to have a multilateral platform. It is a very, I don't know, the bar is very high for implementation of this project, which is a wholesale CBDC. It is of course interesting, and then what we are watching this carefully. Just to tell you that the approach that we are using the euro area is slightly different, and I would mention also in the box that we have on CBDC is that the interoperability, basically the way that our colleagues in the market infrastructure and payments, they want to project a future possible digital euro, it will be to increase interoperability via interlinking the various systems. So not to try to find a unique platform where you trade different CBDC, but interlinking model through common standards. So you set common standards and then you interlink different CBDC that they will develop over time. Or you can do this enabling multi-currency feature backend, so at the end of the project. So, but there are simply different approach, implementation, and it will be a discovery process. And then there is, of course, crucially, the element of coordination is very important. And this brings to the second piece of evidence, and is about Saudi Arabia accepting other currencies. The question is that once you accept other currencies, then what you want to do, you have other currencies, then you want to use them. And then we have a case in point. Actually, we borrowed this example from an excellent study of colleagues that has been published by the Austrian National Bank, focused on European economic integration. These colleagues, Barisic and Evdov Kimova, that they talk about the dollarization, the euroization. And the interesting case is the one of India trying to promote the use of the Indian rupee to settle trade transactions with Russia. So they are the oil refinery companies that they buy oil, and they want to pay with the Indian rupee. And then apparently trying to go through this story, they find that apparently the Russian oil companies, they say, okay, but what do we do now with the Russian rupee, with the Indian rupee? And then they try to switch to the United Arab Emirates, to the dirham. This didn't work either. And then eventually they settled for the renminbi. So the winner in this case was the renminbi. But here the crucial point to take home is that once the uses of currencies are different. You trade currencies. You want to finance yourself with the currencies, and you want to invest in that currency. So you have different uses, and they go along together. And it may not be easy to find an alternative to a dominant currency like the dollar, barring the examples that have been brought, like the cracks that have been brought by Ernest. These are the report. It's also this example is reported in the report. You can find it in the report about the Indian rupee. But I found it particularly interesting and particularly telling.
Very good. Thank you, Maurizio. I think we have exhausted our time today. I'm sorry that I could not take all the questions, but for the sake of time discipline, let me come to the end of today's SWERF BAFFI Bocconi e-lecture on the 2024 ECB Annual Report on the international role of the euro. Thanks a lot to Isabel, Maurizio, Arnaud, and Alicia for your excellent presentations and for the really insightful and vivid discussion, and to all from the audience for your interest and for the very, very relevant and to the point questions. As usual, you'll find the slides on the SWERF event website. Thanks again. Bye-bye and take care.
Bye-bye.
Thank you. Bye.
Thank you.